Let's start with Walmart. Stronger than expected earnings, 11 straight quarters of sales growth now, Andy. E-commerce sales up 43%, and Walmart raised full-year guidance. So that all sounds great. And then I go and I quote the stock, and shares are down.
Yeah, Mac, I mean, of course, one day the stock price can move on a lot of reasons, but like the story here with Walmart, as we talked about last quarter, is really the e-commerce, just the change that they are really trying to push ahead. And just even the commentary, there's so much conversation about the investments they are making in more sophisticated distribution warehouses, online grocery delivery, grocery pickup is a big push for them. So the e-commerce business, Mac, like you said, up 43% this quarter. That's an improvement of 40% last quarter, 33% increase the quarter before that, and 23% 4 quarters ago. So just the year-on-year improvement and the continuing of the trend on the e-commerce sales for Walmart continues to be impressive. The stock reaction today, I think there was probably like, it's still kind of a slow, kind of growing. Like sales are up 1.4%, 2.4% if you back out some of the currency. So maybe not quite so exciting, but really, for such a large company, they continue to make these investments to try to move the needle and obviously compete against Amazon.
Yeah, a lot of good things to focus on in this report. I think the curmudgeonly traders out there today are probably focusing on margins that got hit a little bit due to higher transportation costs, rising e-commerce fulfillment costs, which they actually, that's a good thing because that means they're growing their e-commerce business. But nevertheless, it does come with higher costs. Profits actually down 2%. So it's hard to get excited about a report where profits are down from the previous period last year. So I think that's probably what folks are focusing on, but I do like the raised guidance. I think that makes sense. The stock has been all over the place this year from February through August. It was a woof, as you like to say.
Woof.
But it's come back since then, probably kind of flat year to date. So nothing really exciting coming from the stock. I like the raised guidance, only 21 times earnings right here. For a company that will probably grow in the low single digits. We'll see how that e-commerce continues to ramp.
Well, and they also closed the Flipkart acquisition, which is the Indian business, which they competed a lot for. And that's expensive, and that added to the debt pile for what they have. But that's an exciting investment to make. So they are definitely not standing still. Certainly not the Walmart story of even 5 years ago with the investments they're making, and they have to because there's so much more of a competitive space with free shipping from the likes of Amazon and others who are not standing still. So you have a company that's going to generate $15 billion or so in free cash flow. They're going to basically spend that all in dividends and share buybacks. So it's really a return of capital kind of story for investors. The stocks reacted very nicely off the lows here earlier this year. At $100, it sells about 21 times earnings, a slight premium to the market when you look at forward earnings. So probably not a ton to get excited about in the stock price. But from the business side, they're making the investments that are important to make.
And not curmudgeonly, right? You don't have to be curmudgeonly about it, huh?
No, I don't think so.
Years ago, we used to talk about how they've got to right-size the U.S. business. The U.S. business is everything we talked about. Now they've got it humming along. International, though, isn't where they would want to be. Andy mentioned the Flipkart acquisition, which I think is a really interesting one. Unfortunately, the CEO of that business unit had to resign following an allegation of sexual assault. So obviously, that kind of throws a little bit monkey wrench into some works. They had to shed control of their Brazil operations. They merged their UK operations with a rival to focus on the US business and their e-commerce business. So international kind of floundering. They need to figure that out next, I think.
Just on the US side, the comp growth of 3.4%, that's a 1.2% increase in traffic. So more people coming into the stores, but a 2.2% increase on the average ticket price. So they actually are seeing a little bit of benefits, and that's a little bit higher than inflation. So they actually are seeing some benefits from some of the pricing mechanisms that they're putting forward, and that's an increase off of the 1.2% from last quarter. So they are actually seeing some pricing benefits, which you don't really particularly expect to see that from Walmart in this kind of environment.
And along those lines, let's talk about two areas of the business that really appear to be growing. Toys, so benefiting from the Toys R Us bankruptcy, and groceries. By the end of the year, Walmart expects to be able to deliver groceries to 40% of the U.S. population.
I guess if you look at my household, groceries and toys are a pretty good spot to focus in with 2 young kids. And that's, bread and butter, trying to serve the customer base that Walmart wants to serve in ways that are more convenient. That's, as Ron mentioned, their investments in that. The new distribution center they've been working on in California will allow them to ship product goods that are 40% at a 40% faster rate than the traditional distribution centers. So a lot of investments, a lot of robotic investments going into the distribution centers. So Amazon's done this so well. Walmart now playing catch up. The groceries, we all buy groceries. I mean, I eat every day, Mac. So I've seen you eat pretty much almost every day.
Pretty.
Certainly, Ron.
It is not pretty.
It may not be pretty.
I don't like to miss a meal.
But we all depend on food, and so it's a good spot for them to focus on and trying to now meet the customers where they want to be met.
I love this quote. CEO McMillan said Walmart can offer fresh food within 10 miles of 90% of the U.S. population. That's pretty powerful.
And you're still curmudgeonly, or are you coming off that?
No, it's not good. This company and this stock is not going to knock the cover off the ball. But from a total return perspective, as part of your more conservative portion of your portfolio, I got no problem with it.
2% dividend yield. I mean, it's not. Don't expect fireworks, but certainly over the last couple of months, it's been a nice performer for people who've held on.